Monday, March the 23rd. I'm Martin Straith from the Trend Letter. Hope you had a good weekend. It certainly was an interesting weekend for the markets, and certainly the start of the week is pretty interesting as well. I'm sure you heard on the weekend, Donald Trump gave Iran an ultimatum, a 48-hour ultimatum to clear the Strait of Hormuz within those 48 hours, or he was going to take out their power infrastructure. But then this morning, he said that he's going to back off that. He's going to give them an extra 5 days because he said that Iran has approached the U.S. and they want to talk peace talks. Then, of course, Iran came out after that and said they have had no peace talks. They have no interest. Their position is the same as it was before the war, and they are not really that interested in anything other than their initial position. So some jawboning for sure, probably on both sides. Clearly, Trump needed to do something. I think that, he's getting a lot of pressure at home. High energy prices mean high inflation. We've got the gas prices in the U.S. are too high for him. The people are getting upset. A lot of people don't want the war. His ratings have gone way down. And he's got midterm elections coming up. And, so you got all of that. You've got the stock market, going down. You've got the bond yields rising. That means more, interest payments, higher mortgages for people trying to buy a house. And it means higher interest payments for the U.S. government. I mean, he's racking up a couple $1 trillion debts or deficits. That means that they have to pay, last year they paid $1 trillion just for interest payments on their debt. So all of those things compounded. That's not looking good for their election hopes. So I think this is his first attempt to kind of just calm the waters for a bit. We'll see if that extends out. We'll see if something happens where they actually do start talking peace. Let's hope so. If they can get the Strait of Hormuz open, that would be huge. But right now it's still closed, and we'll just see how this plays out. But let's have a look how the markets reacted to all this. Here's the oil. Of course, as the war broke out, we saw the prices spike up here. We got that intraday spike up to $120 here. So that was the high. And then it pulled right back. And it kind of traded back and forth here for a while, which is interesting because you would think that with all the bombing, all the threats going on, that oil would have kind of worked its way back up higher. Back in the Ukraine-Russia war, it got up to $130. So it's interesting that it has remained lower here. The highest it got was right in here, so about 103. And then again, it's tried to pike through, but it never really got that high. This morning, it did spike up to almost 103. But then again, his announcement was there. And so then it dropped all the way down to about 84. And now it's closed the day so far at about 88. So that's how oil has responded. So again, we're going to have to see how this all plays out. There's a good chance that if Iran's saying we're not interested in talking peace, and basically Trump just made this up. If the bombing continues and the strait remains closed, you're probably going to see oil rally up here. And at some point, until that strait is open, and once it opens, well, then of course you could start seeing the prices come back down. But that certainly hasn't happened yet. So we'll see where that goes. Now, if we do get some miraculous peace agreement, I can see oil coming down to the low 70s and even lower at some point, should you get some kind of positive action. So that's oil. Now let's take a look at how the stock market reacted. So here's the S&P 500. We've shown this a number of times in these videos. Basically what we did is from COVID low, we ran a support line to the next support through these cluster of them here. And then through Liberation Day was basically the last one. And then we ran it up to there. Then we just basically extended that line up into a parallel channel. And so now you've got this really clear uptrend channel, which is very positive. So from the COVID low, we had a nice rally, just about touched this resistance. Then it fell all the way back and then tested the lower rung and then kind of bounced around in here, testing against support, really held up. had another nice run, and then until Trump did Liberation Day, so he threatened all those tariffs. And then we had another huge run ever since then when he backed off. And so we tested resistance here, here, and here, and but that was kind of the peak. Now we ran a support line from Liberation Day up through the next support here into this one and right up until here. And we can see then that as of January the 28th, that was pretty much it for the market. And from that point on, it just basically rolled over here. And once it rolls over, that was really it. So that's kind of where we got to now. And then we had, of course, we had some support level here at 70 or 67.18. Market ended up, it tried to balance through there, but it couldn't. Then its next support here was after that big sell-off down there. So it's 65.44. And then that point, it couldn't get any further. So now, and what we told our subscribers on the weekend, we were expecting that this level would hold some pretty strong support. And so what we're looking for now is that we do get a bit of a bounce. Now, of course, a bounce is only as good if the news is still positive, but it's very oversold here. So we certainly could see a nice rally here. I don't know if we get back up to 67.19. We could be done, but I would suspect you're going to get a couple tests here. But ultimately, I think you're going to probably break down below. But this first run here could be a pretty positive one. I think that's really what we're looking for. And if we get that, that's great. But if we see 65.44 break, well, then we need to look at, what's the next support level. And really at that point, we're looking at probably down to around here at about 60, what's that, 62.44. And then again, that happens to hit the halfway point on this parallel channel. So that's pretty good support level here. So again, we're expecting we'll probably get a nice rally here. News, of course, will dictate how well that lasts. But I think you're going to see some more downward pressure ultimately, and then further support down here. All right. So now let's have a look at how the metals are doing. So we're looking at gold. So gold, gold was in a nice kind of uptrend here. The support level all the way through here. But again, after the big parabolic move higher, we saw gold, we had that 2 days massive sell-off. And again, we warned for both gold and especially silver, when you get a parabolic move like that, the parabolic move up is phenomenal, but clearly the move down is going to be just as intense. And that's exactly what we had happen. So we had this huge pullback. And then, of course, we had all the buy the dippers come in, start to rally back up. And the key is that the close here at 54.50, it needed to break through that to create a brand new high, and it could not do that. So that became, to us, that was a very technically strong point, and that was very negative. And then we had gold pull back, tried a weak rally here, couldn't do anything, and then it just started to break down. It broke down. This initial support was after that big drop here at 48.70, and right at that's right around the uptrend line at that support. So you had that double whammy here where it broke through both of those support levels. And then, of course, we had this next support after this pullback. So 46.60 was the key one. And then we had this really strong one where that previous high was also support, very strong at 43.80. And at that point, what we've been telling our subscribers is that we were expecting a pretty good rally off this level, maybe even back up to 46.60. Now, that could still happen, but we'll see what happens with all of this noise, because right now, gold's reacting to primarily, the strength in the U.S. dollar, the strength in the U.S. bond yields, and of course, the whole Dubai, the fact that they can't ship their gold out. So there's all kinds of things happening there. So you got the whole paper physical issue, but ultimately, I mean, gold needs to rally. It should be, a a support thing for the safe havens. It's not acting that way now. I think you're probably going to start to see it kind of bounce around. Ultimately, I can see gold even breaking down further. But we should get a pretty good rally here out of gold. And so let's take a look at silver. We've shown this chart quite a few times. Basically, you had, major support at $52. That's where this big parabolic run started to happen. We went from $52 all the way up to 120 in a very short order. And, this parabolic move here from about 92 up to 120 was massive. And again, we warn people, don't be buying on a parabolic rise like this. Sadly, the people that did buy, they saw that people bought in here, and they then saw that their investment just gave back 40 to 45% in 2 days. And then, of course, so then we say we got some strong support here at 72, pretty good resistance at 92. And silver just basically is trading in and out of that. It tested this 92 level twice in here, but could not break through it. And again, that told us that we're probably going in for lower highs, lower lows, starting to move back down, and it moved into there. So now what do we got? We've got silver testing the support. We were looking for some rally off of here. Now remember, silver is much more volatile than gold. I think we can come back, have a rally test again, but I suspect that we're going to get another breakdown in silver. And ultimately, I think we're going to see this $52 level tested again. So that's a very quick recap. We'll see how the market plays out this week. If we get some more volatile action, we'll pop in another short video. So again, that sort of does it for today. Stay connected, keep your head up, and enjoy the rest of your day. Take care.